Good afternoon, everyone, and welcome to this Faith and Finance presentation. My name is Andrew Walter, and I serve the Diocese of Washington as Canon for Strategic Collaboration. This webinar is being brought to you by the Financial Resources Committee of the Diocese. The Financial Resources Committee seeks to provide financial guidance to the congregations and the people across the diocese. The committee helps with annual giving campaigns in the fall, planned giving, and as in today's webinar, personal financial guidance. I'd like to thank our panelists, Lisa, Melanie, and Rick, for sharing their expertise with us to help us financially navigate these economically uncertain times. If I may, I'd like to begin with a prayer, and then I'll turn it over to today's panelists. Let us pray. Holy God, with so much swirling about us these days, we remember that moment in the Bible when the disciples were on a boat in the middle of the Sea of Galilee, the wind blowing, the waves breaking across the boat. The disciples were full of fear, and yet you, Lord, appeared to them. You were there in the boat with them, quieting the storm. We look to you today for that peace that passes all understanding. Fill us with your Holy Spirit that we know, despite all of the uncertainty around us, that you are with us, loving us and guiding us. In Jesus' name we pray. Amen.
Amen.
And with that, I'll turn it over to Lisa.
Thank you, Andrew. Hello, everyone. Thank you for joining us today. We really appreciate the opportunity to speak to you. We know that this has been, for many people, a challenging time. And so our hope, as part of the Personal Finance Subcommittee of the Financial Resources Committee, is to share with you some tips and ideas and make sure that you're up to speed on the opportunities and resources that are available to you, whether you're just an individual and a worker or whether you're a small business owner, and also to make sure that you're watching out for the increased fraud that is out there. Financial fraud is a challenge, and we're going to be talking about that as well. As part of the committee, I'm Lisa Kirchenbauer, founder and president of Omega Wealth Management in Arlington, Virginia, and I'm a member of the St. John's Lafayette Square Parish. I'm joined by Melanie Folstad and Rick McCumber, who are my other teammates and panelists today. Before we dive into the more technical side of our presentation, we wanted to put some context around what we think a lot of people have been going through. And so we wanted to talk a little bit about the pandemic and perhaps the stages that you have been feeling and going through in the pandemic, because what's unprecedented is that it's not just a financial crisis, it's a health crisis. And from time to time, one is leading the other. And so that's what makes it much harder than perhaps 10 or 12 years ago when we were more focused on the financial side, but you could still go to restaurants, or you could still easily go to the store, or you could be with family and friends. And so that makes this a lot more difficult. So we want to share with you that Melanie, if we could look at that first slide, the four stages of a pandemic and what that can be like for people. So for some of us, depending on where you live, you may have anticipated that things were going to lock down and things were going to start to change for you. But for many of us, it was very abrupt and happened overnight. I know that in the week or two right before we closed down, I had actually been on an airplane and been on the West Coast visiting with clients. And so then all of a sudden, everything changed quite a bit. And Melanie, maybe we can make I don't know if we can make this slide a little bit bigger, maybe not. Let's see. No, that's pretty good. Thank you. And then from there, for all of us, things locked down, especially in this area in the district and in Virginia and Maryland. We had this perhaps an ending. The lockdown, early stages now of opening up. And again, state by state, it's a little bit different. There's some testing, but not all of the testing perhaps we need. There is talk of treatment and certainly a lot of focus on getting a vaccine. And I think people are starting to feel a little bit more confident, maybe at least from the pandemic side, maybe not so much from the financial side, but that we can get around, and perhaps, we live a while with masks, and we wash our hands a lot, and we get through this period. And this may last us, really into 2021. It may last us a while. From there, and what I want to prepare you for is that we're not going back to the old normal. We're moving forward into a new stage. So then we move into what we like to call passage. And that is a time where it feels a little bit more settled, and maybe there are still adjustments to be made, and we're adapting as best as we can. And there's perhaps some normal to your routine. Maybe it's not quite the same as it used to be, but it feels a little bit more normal. And really the beginnings of thinking about things differently, maybe choosing to do different work, or how you do that work, or maybe changing something if you have a small business, or even just your personal finances. This is a great time to think about what you might change. And we're going to talk about that at the very end. And so here's the bigger news is that this isn't going to change. We're not going to be in the new normal necessarily next year. It's going to take some time, just as it did for many people after 9/11. And if you can remember back to that, there were times where, you could go right up to the gate where a loved one was arriving from somewhere else in the airport, and you could be right there. And after 9/11, that went away. And this is what this experience will be like as well. From there, we actually get to that new normal. So, several years from now, it'll just be how we operate. And we'll start to think about what did we do well? What could we have done differently? And how can we prepare better in the future? And yet, even though we have those conversations now, it's hard to get perspective. And so the reason we start with this is because we understand that this is going to be a process. And although there's a lot of things that have happened very quickly, financially, the government has stepped in many ways. It's going to take some time to recover. In fact, I was reading recently that it may take several years to get unemployment down to where it was even as recently as February. From there, we wanted to talk a little bit about something else you might be feeling. Let's go to the next slide if we could. So I want to talk a little bit about grief. And as much as I'm a half full, glass half full type of person, I also realize and want to honor that everyone's experience is different. And there has been a lot of grief. And now, as we go through this new stage beyond the pandemic and the financial crisis, and dealing with social justice issues and the unrest that's out there because of frustration that people are having, the grief is coming back again. So there's first a sense of collective grief. Many of us felt that back when the lockdown started and we first heard about the pandemic, and we didn't know what to do, and we didn't know how it was transmitted. And everybody is dealing with it differently, which we'll talk about in a moment. Some people would address the issue, some people were avoiding it. And I guess, right now we may be feeling some more of that. And the next stage is really anticipatory grief. And some of you may be feeling some of that as well, that perhaps you were hoping that as we opened back up and the lockdown ended and the restrictions went away, that you could get back to the things that you were looking for, that you could anticipate perhaps that vacation with family, or just gathering with people you care about, and that school would get back to normal in the fall. And I think a lot of people are starting to realize that perhaps the fall and even the summer is not going to be like we expected. And so having that sense of anticipatory grief is really important. And not knowing what to anticipate makes it even harder and can be really unsettling. And so there's these stages of grief. And I think what I would encourage you to think about is perhaps, where are you on this continuum? Where are the people you care about? And please know that not everybody is at the same place, and you can move back and forth between these 6 stages. So the first one is denial, really a sense of not quite coming to grips with what's happening, maybe a little behind the 8 ball on it. We've already locked down, you weren't quite ready, this can't really be happening, why are we having to do this? And from there, some of you may have been feeling some anger, getting frustrated. And even now, I think for folks who've been locked down longer than in other states, there's some frustration, and it feels like, gee, why do we have to keep doing this? And maybe because you're in that place, you're not as sensitive to where other people might be at this point. And then there's a sense of bargaining. You know, I can do this for a while and then it should change and it'll get better and maybe I can do it for a little bit longer. So you're trying to work through it, but still struggling a bit. I have to say that the next three stages are where I've spent a lot of time in the last month or so. First is sadness, really sort of a flatness, a little sadness, maybe a little tired, struggling with what isn't going to happen, what it's going to take time to recapture, and just, you know, being a little sad. And then from there, being able to move to acceptance. Okay, so this is where we are. I can't control everything. I know what I can control, and that's where I'm going to focus. And I just have to let go of the rest of it. And finally, as I said, you can be moving back and forth between all of these stages is meaning. And that's part of why Melanie, Rick, and I are here today, is that we saw this as an opportunity to reach out to you, to try to offer some information, to offer some hope, some encouragement, to offer some support in getting through this. And so that's why we're here today, is that we're all moving into meaning. And then for you personally, it's an opportunity to think about what's next for you, to think about what's important, what you can let go of, and to really be more observant to where we are in relation to our lives, in relation to connection to our parishes, what's most important, what are we longing for. Great opportunity to reflect on all of that. So we wanted to set this stage and this context before we just dived right into all of the technical side of our presentation. And now it's really time to do that. So what we wanted to do, and Melanie's going to take over this part of the presentation, is to walk you through some tips, some updates on what is available in terms of support and resources to you. So go ahead, Melanie.
There we go. Thank you, Lisa, and thank you so much for giving us that context. And I think you know, that the thing I can maybe add to that is Lisa and I are both financial advisors, and so for the last several months we've been having so many conversations with people, and all of the things that she just said we have both seen and experienced in these conversations. So what I want to really emphasize and hopefully provide some comfort is that if you're experiencing these, you're normal. This is exactly the types of emotions and feelings and experiences that you should be having given what's going on. That doesn't necessarily make them go away. That doesn't necessarily make them easier, but hopefully it makes you feel like you're in good company, and you're certainly there's nothing that you're doing wrong if you're finding that you're sometimes sad or anxious or feeling a little bit lost as we navigate through all of this. So as Lisa mentioned, Rick and I are both members over at St. John's Norwood, and for the last couple of years we've been offering some financial courses, and now Lisa has also brought in a wealth of information, and we're building on that. And so with that as sort of the backdrop, we thought this was really an opportune time to come to you and hopefully offer some information that's especially pertinent to our current circumstances. So I'm going to start out here with some sort of basic bullet points, and I'm going to use the SMART acronym, which you've probably heard in the past, but I've taken some liberties with it and changed what those letters stand for. So as you're starting to think about your own personal finances, there are some pretty easy steps that you can put into play pretty quickly that can really help empower you and get you on the right track as you try and maneuver through this period. So the first one I'll mention here is, with the S, is to stop or postpone. And so when I'm talking about stopping and postponing, I'm saying what are the things in your budget or in your spending that you can stop or take a pause on. And these are typically referred to as your discretionary expenses, ones that you have discretion over. They're not imperative, they're not obligations. So, and examples of that are, you know, maybe a home improvement project, or maybe a vacation, or things that you would want to do but didn't need to do. And so this is, and again, you're in great company if you're reevaluating some of those expenditures, especially this year. I think and for some of us, it's not even an option. Vacationing and going out and doing some of these things that we wanted to do, that decision's sort of been taken care of for us. But it's one of the first and probably the easiest steps to do as you look at your spending. Then the second one is to monitor. So M is for monitor. And so create a list of what's coming in and what's going out. If you want to get fancy, you might refer to this as a cash flow analysis, but it's nothing too complicated. It's just a matter of trying to figure out, okay, what do I know is coming in, and then where is it going from there? And I would say, as best you can, try and check on this on a weekly basis and monitor that. I find it very enlightening to kind of become more aware of what I'm doing with my money, and also then help me to make more informed decisions about what I can do with my money. So, and I know when I say this, sometimes people say, well, gosh, that kind of sounds like a budget. Well, yeah, it kind of is, but don't be afraid of the budget. Lisa and I like to use the word spending plan. It's a little bit more friendly, perhaps. And at first it'll feel a little clunky and perhaps not be something that comes to you very naturally, but it is something you will pick up on pretty quickly, and you'll find that it gets easier with each week. So then next, the A is for allow. What will you spend money on? And so here's where you start to prioritize your expenses. What are the things that are most important to you? And some of them are pretty obvious. I always think that food, housing, and transportation are pretty high on that list. So those are almost always the 1, 2, and 3 in some order on things that you need to spend money on. The other things that I think are higher priorities, and this will somewhat depend on your circumstances, but internet and cell phone are things that are pretty important to most of us, and can be also important just in order for us to be able to work right now, with so many of us teleworking, that we really need to have that sort of communication technology in order to continue to stay employed and be effective in your employment. So, and then other things probably start to lessen in terms of what's important. And so trying to kind of assign a number to them on where they fall on the list. And the ones further down on the list will be the ones that will be the most likely candidates for a reevaluation. And that takes us to R, which is reduce. So what can be cut back on? One thing that I know that we've certainly reduced our spending on is meals. First of all, because we're not going out to eat. It's pretty hard to find a place to go out to eat. But even the foods that we're cooking at home, we're being a bit more thoughtful about it. One, because we're at home and we can take more time to prepare meals, but also we're trying to be eating healthy, but also efficiently. And when I say efficiently, we're being very cost aware of what we're spending our money on in our groceries. So looking at your menus might be one place for you to make some adjustments. The other one, and this is one that sneaks up on me, and I know a lot of my clients, is some of those recurring expenses that you might have that are kind of on auto pay. And every once in a while, when I do a more careful evaluation of my credit card statement or my bank statement, I'm reminded of some of those that I put in place that probably aren't as important to me now as they were in the past. And now is a perfect time to reconsider those and reevaluate whether you need to continue with them, or maybe just make some adjustments as to how you're doing that. I was just noticing that, I have $10 a month going here and $15 a month going there, and not any one of them is a big ticket item and probably would make or break us. But when you start to add them up and when you start to realize what is a priority for you, these might be good candidates for you to examine and reconsider. And then the last one, and this one I really do value, and it's T for talk. I think, and I know, just in my experience in talking with others, is that sharing the angst or the questions or the issues that you're grappling with in a financial way with somebody else can be so incredibly therapeutic and probably helpful. And it doesn't need to be somebody who is a finance whiz. Sometimes just having a sounding board who can hear you express yourself can be very purposeful and valuable. But don't be afraid to seek somebody out that you think would be a good person for you to share this with. Sometimes just saying it out loud takes some of the emotion away from it and makes it a more manageable thing to deal with. So I hope that some of those tips there might be useful to you. All right, so let me go now to our next slide and talk a little bit about things that you want to be doing once you've addressed those SMART issues. The first thing is, if you are finding that you are in a more financially fragile situation, being proactive is really key for managing how you're going to survive and navigate through this. If you have a landlord or a mortgage or a lender or anybody to whom you think you're going to struggle with making the payment, reach out to them as soon as possible and go to them just as transparently and authentically as you can with your situation. Express that you want to make good on your obligation and that your intentions are honorable, but that you're going to be struggling or your circumstances have changed. My experience has been that most folks are really going to try and work with you. And especially right now, many have already got processes in place because they're anticipating these conversations. They're having them already, but they want to cooperate and collaborate with you on a solution. They would rather you not come to them with, 2 weeks after the bill was due, and for you to try and say, oh gosh, I know I'm 2 weeks late. So you want to get there 2 weeks ahead of time and say, I'm going to try my best to be on time with my payment, but I might be late, and what are my options here, and how can we figure this out together so that we're both working on this for the same goal. So being that proactive client or customer is really a really important first step. Next, I would say, oops, I think that I skipped one. Then look for ways for you to try and supplement your income or provide more resources. And I know this sometimes sounds easier said than done, and it probably is. But if you can find a side gig or some other opportunities for supplementing your income, it's really been a time for people to get creative. And I've been kind of watching various Facebook groups and different listservs about possibilities out there. So they're out there, and they're not all great for everybody, but just keeping your eyes open to the possibilities and realizing that it's probably just a temporary situation and it'll carry you through. But also look for some of the other resources that are in place. The SNAP program has been expanded somewhat, and other government programs have been expanded. So look to your local government officials and resources to see what is out there and that you might be able to tap into. We are in the process of putting together a list of resources, and we can make that available to you. It's constantly evolving, so kind of bear with us that this is a constant work in process. But really, I'm so impressed with how many organizations have rallied and gotten different types of programs in place to help out. The American Job Center and Employment Assistance Programs is another one if you're looking for employment. And then Empower Work is an interesting program that helps you. It will connect you with a trained peer counselor if you're trying to figure out how to either maintain your current job situation or if you're needing to try and make some transitions. So there are, like I say, lots of good resources out there for you. And I'm going to now kind of skip over into the CARES Act. And I'll admittedly be somewhat 30,000 feet with this because there's just so much to it. And there's a lot of details and a lot of details that are still being sort of fleshed out. So I probably don't have all the answers, but my goal here is just to make you familiar with the major bullet points in the CARES Act so you are aware of some of the things that are out there, and then you can pursue digging a little bit deeper if some of them are applicable to you. What's really quite incredible is that the CARES Act, which was passed back at the end of March, is a $2.3 trillion emergency relief act, and it is the largest package ever passed in U.S. history, with 90% of U.S. households expected to benefit in one way or another. And it provides assistance both at the corporate level for industries, but also for individuals. So it's very expansive, and I think something that we should be really quite surprised that they were able to put together as quickly as they did. There is a component of unemployment relief as a piece of the CARES Act, and so that it expands eligibility. It also allows for a longer duration of payments as well as bigger payments. And there's also an extension of benefits provision that allows for an additional 13 weeks of unemployment insurance. So if you are unemployed, you'll probably find that the options and the availability of resources to you is quite a bit more robust than it otherwise would have been. Additionally, and this is one that most people are aware of and probably have already received, are the recovery rebates. And this is actually what is expected to go to 90% of US taxpayers. It's been structured as a tax credit, and it's been a payment of $1,200 per individual. And if you're married, that gets doubled to $2,400, plus an additional $500 for each child who is under 17 in your household. Now, there are some phase outs if your adjusted gross income is at certain levels, so not everybody is getting this, but really the majority of US households have received this payment. If you haven't yet received this, you can go to the IRS's website and get the current status of your payment and make sure that you get those funds. Additionally, another component to the CARES Act are a whole collection of provisions for retirement. The first one I'll talk to is specifically for individuals who are 72 and older. If you are 72 or older, you are probably familiar with something referred to as an RMD, which is a required minimum distribution. And it's essentially a requirement that the government imposes. It says that once you hit a certain age, and in this case now it's 72, you have to start taking money from your retirement accounts. And the idea being that you've had this tax deferred account for many, many years, and now they want you to start receiving income so that they can start receiving income taxes. Well, for this year, and this year only, they have suspended that obligation. So if you are typically taking money from your retirement account, you're still most welcome to do so. You're always have full access to your accounts, but you don't have to take anything this year. And this also applies to inherited IRAs. So if you're under 72 and you've inherited retirement accounts, you can defer and not defer, but suspend your distribution for this year. And if you have already taken it, there is, it's a 60-day opportunity to roll that back into the account so that you can return that income to the account and not recognize that as taxable income this year. So this is actually a pretty big deal for a lot of retirees, because some people, this was a big thing for them to have to take, and especially back in March and April when investment accounts were especially depressed. Nobody was wanting to take out distributions when their assets were lower. So now they're kind of absolved from having to do that this year. Some other provisions is, and this would apply to people who are of all ages, so this is not just for the 72 and plus, but you are now allowed to take distributions from retirement accounts at a greater amount than you otherwise would have. And so you can take up to $100,000 and not be subject to the 10% penalty if you were under 59 and a half. Now, but you want to be careful here, because you need to be taking these funds because you are being directly affected by COVID-19. And I bulleted here the provisions that they say would be acceptable for meeting that requirement. And these are pretty easily attainable on the web, but just be careful if you're going to take anything from a retirement account, because you want to make sure you are legitimately eligible and therefore not subject to the restriction or to the penalty. On top of that, and I kind of mentioned the 10% penalty, but there is also a loan provision for many retirement plans, and that has been increased this year from $50,000 to $100,000, so that if you do want to take some money but not take it as a distribution from your retirement account, you can probably take a loan from your account, and the ceiling on that loan has doubled. And you can also defer making payments on that loan for 1 year. And one thing I've neglected to mention on the earlier part about when you take a distribution from your retirement plan, if you do end up taking that distribution, you can do kind of two things. One, you can recognize that income over 3 years. So if you're not planning on putting it back into the account, you could spread it out so that the tax liability is not all incurred in 1 calendar year. And then you also have the option of pushing the money back into the account if it turns out that you're able to do so. And then you would file an amended return that showing that you didn't accept that income and then not have to pay the income tax on it. So it's a little bit more technical, and that's probably more than you wanted to hear on distribution plans, but just the big point here being that you have options and you might want to look into those if you're in a situation where you're looking for some income. Shifting gears just a little bit, there is a provision in the CARES Act on student debt. So if you have a federal student loan, those payments are deferred through September. There's no interest that's being accrued between March 27th and September 30th. But if you do have automatic payments set up for your loans, you need to put that on pause. Otherwise, they're going to continue to ACH or take those payments from you. And it's voluntary, so you're certainly welcome to continue making payments, but there's just no obligation to do so. And there's no debt collection on federal student loans. But please make note that this is just for the federal loans. There's no relief in the CARES Act for private loans. So if you have private student loans, just talk to your lender directly to see what, if any, programs they are offering. And touching just a little bit, another piece in the CARES Act is on healthcare related provisions. And so they've expanded the definition of eligible medical expenses. And this pertains primarily to HSAs, which are health savings account, or MSAs. And it also refers to some over-the-counter medications. So one change that's going to be, I think, important is if you're on Medicare, you're going to be able to get the vaccine without charge when the vaccine gets here, which we're all hoping is sooner rather than later. And Part D recipients can take now a 90-day supply of medication, and also a lot of telehealth services can now be covered through your HSA, your health savings account, if you're in a high deductible health plan. So as we're all learning that so much is being done by teleconference nowadays, and health services is one of those, they wanted to make sure that people were able to get the services they needed and be able to use their coverage for doing so. And I'll just touch slightly on the mortgage and rent forbearance, since I talked about this a little bit earlier, but many mortgage companies are offering forbearance programs where you can make some adjustments to how your loan repayment is structured. I don't have a great deal of experience with this, so I'll just mention the one word of caution here is that very frequently there's really not a reduction in the amount you're going to be paying overall. It's just restructuring how it's being paid. So be very aware of what you're signing up for if you are trying to ask for a reevaluation of your payment program, and if you are going to be needing to make big payments later on, that you're not putting yourself in a bad spot down the road. And same thing with your landlord. If you're in a rent situation, you want to make sure that whatever negotiation you work out with them, that you're not setting yourself up for a bad spot later on. So with that said, I think I'll hand it over to Lisa, who's going to help us see how we can work with our employers. So I'm going to stop sharing mine, and Lisa, are you able to take over there?
Myself off mute. There we go. Yeah, there we go. And one thing I want to say before we move from the personal side to the business side is that, again, I mentioned this earlier, this is an unprecedented time for so many people. And you may be somebody who has worked hard and who's never needed support or resources or aid or handouts. I don't even like to call it that, but let's just say resources and support. And I want to just say to you, it's okay. This is, as Melanie said earlier, this isn't something that you did. This is unprecedented. This is two crises coming together very quickly. And so it's okay. We're giving you permission to ask for the help, to go look for the resources, to reach out to your church, to reach out to your state and local communities for resources. People want to help, and it's okay. And things will eventually move to that new normal. In the meantime, we want you to be safe. We want you to be healthy. We want you to be okay financially as best as you can make that work. So we know that some people are not only worried about their individual and personal situation, but some people also have a small business, or these days, there's lots of people in what we would call the gig economy who are independent contractors, whether you're a consultant, whether you're an Uber driver, whatever it might be, where you get what we would call 1099 income versus W-2 income as an employee of an organization, of a company. So let me, for the moment, we're going to switch gears just for a couple of slides to talk a little bit to anyone who's an independent contractor or who is a small business owner or an entrepreneur. So I know some of this is going to be a little old because this has been out there now for a while. We started putting these slides together, honestly, over a month ago. It's not too late to apply for the Paycheck Protection Program. And the good news is that the PPP program, as we call it, has continued to evolve, become more flexible, and both independent contractors and small business owners can apply for it. It is actually offered through banks, and that's been one of the challenges. We realize that because not everyone has a really strong banking relationship. This is a time to try to have a strong banking relationship. Hopefully you have some banking relationship, and certainly the government has tried to prioritize, at least at some points, smaller community banks getting in line to apply and to submit applications from their clients, their customers, for the PPP program. So it's actually managed through banks as opposed to the Small Business Administration. Although the Small Business Administration gets involved later on, to start with, you need to reach out to a bank. And the other thing, just like what we were talking about on the personal side, if need be, this is a time where you need to reach out to creditors, your landlord. It might be credit card companies. It might be your land, if you actually own your building, to the bank. And it might be that you need to work out some forbearance on having to make rent payments or to make mortgage payments, or maybe you've got a loan and perhaps you can adjust that, maybe pay less for a little while. The key, what we have been saying to all of our business owner clients and independent contractor clients, is cash is king. Finding cash, holding on to cash is really important right now. This is not the time necessarily to pay off all your debts, feel good about that, but then have a crisis show up in a month or two because it's been hard to get business going, and maybe now it's harder to get credit. So one of the things, if you're already working with a Small Business Administration and have a loan with them, they can actually push those costs off, and they'll cover the loan cost for 6 months. You need to reach out to them to work that out. You might be able to negotiate a lower interest rate. So there are some options if you're already working directly with the Small Business Administration. And certainly if your business is working with a government agency, this is a good time to reach out and see if you can adjust payments and contracts and things. Maybe you can get an advancement on payments, on income. This is, although it seems, again, just as an individual, you may feel a little bit vulnerable, maybe a little bit ashamed even, to be asking for help or asking for the opportunity to defer or for forbearance, as we've talked about. And yet everybody understands this is a hard time and it's not over yet. It's going to take some time to come out of this. But I think if you communicate as quickly as possible, as Melanie talked about before, and do your best to try to show good faith in paying your creditors, that's what everybody's looking for. So lots to think about. Now, whoops, let me go back one. So what is the Paycheck Protection Program? Now, the one thing I will say is that the rules are changing. They've just recently changed again. And so this is something where if you have a banking relationship and you haven't already pursued the PPP, or maybe you did get a PPP loan, it is worth reaching back out to your bank to understand the terms. I'm going to try to just highlight a couple of the key points and key opportunities, but you really need to reach back to your lender to know where the regulations and the due dates stand. So as I said, the PPP, Paycheck Protection Program, is with banks, and then versus the SBA, which manages a couple of other programs that you may have heard of if you're a business owner, the Economic Injury Disaster Loan Program, also called EIDL, which is still available. They've been quite behind at the SBA in processing applications, and there's a lot more. It really is a loan, whereas with the PPP program, your loan may be forgiven, which is a completely new program that has never existed before. And then there is also an even newer program called the Main Street Loan Facility, and that is for bigger companies. Actually, you can, I think the minimum loan is $250,000 and goes up to millions of dollars. That's for a bigger company. Today, I'm going to be focused on small businesses and independent contractors at this point. Now, this is, as I said, the PPP loan is very unusual because it may be forgiven. If you meet the criteria I'm going to share in a moment, you may not have to pay this back, which is really a blessing for so many small business owners and independent contractors. If it isn't, if you can't meet all the terms, the good news is it becomes up to a 5-year loan at 1% interest rate per year. It's the best loan that you can imagine getting as a small business owner or as an independent contractor compared to banks, credit cards, anything like that. So it's still worth pursuing. Now, the loan calculations are a little funny. They're based on 2019 income or 2019 payroll expenses and provides up to 2.5 times, so basically of your monthly payroll. Now, the other provision that you need to pay attention to carefully is that they will only provide payroll, the loan amount on payroll expenses for payroll of $100,000, less than $100,000 per person. So if somebody makes $150,000, or you're an independent contractor and you made $150,000 last year, they will only provide a loan based on $100,000. And actually, the 2.5% of $100,000 ends up being $15,385 for an independent contractor. That's the most that you can get. Now, as a small business, you can get more if you've got other employees and you have other expenses. Now, the key is that instead of 8 weeks as originally stated, you now have 24 weeks to spend that PPP money once you get it. So for restaurants, for retail organizations, that it's going to take, they're just opening up and it's going to take you some time to get people rehired. You can get that done and you have more time now. There was a big rush on that, and the good news is that you have a reasonable amount of time to make that happen. The other provision that was changed was that now, rather than 75% of the proceeds needing to be used for payroll related expenses, it's 60% of the proceeds that must be used for payroll expenses. So that's a lot easier, especially again, if you're in a retail type of situation business where it may be harder to spend all of that as quickly. And then the remaining 40% can be used for any sort of operating expenses, whether it's rent or mortgage or utilities. So you've got a lot more flexibility. So I think the good news is that the government heard all of us small business owners, realized that we needed some more flexibility, especially for the folks out there running retail and restaurant companies where it's just going to take some time for them to get back up to speed. And there are some provisions as far as the loan forgiveness. You don't have to apply for forgiveness until later this year. So even when the time period runs out for you to spend your money, you may have some more time before you have to apply for the loan forgiveness. And it's a little, the application takes a little bit of time, but hopefully you can work with your bank to get through that and get the forgiveness and not have to pay the loan back. But worst case, if you do have to pay the loan back, or maybe a portion of it, it's 1% interest a year, which is really a great deal. Now, one other thing to talk about is if you have employees, through the CARES Act, as an employer, you can delay paying payroll taxes for a while, which is nice. Now, that said, I urge you to be careful about doing this. So you can spread them out, pay 50% by the end of next year and 50% by the end of 2022. So what you need to be careful about here is that you don't want to have a situation where you put that liability, that expense off, and then next year maybe things are still a little slow, and then you get to the end of the year and you're behind the 8 ball trying to catch up on your payroll taxes. So be very careful and really think that through. Just as we were talking about budgeting and looking carefully at your income and expenses personally, it's really important to be doing that as a small business owner. And for some of you that may have had some net operating losses in a prior year in 2019 perhaps, or think you are going to have them for this year, that you can actually take, there's been some changes in the tax laws that will allow you to take those losses and apply them to a year where you had a profit, and to potentially amend your tax return and get a refund for a past tax year. So this is the point where you really need to talk with your business accountant, with someone who can help you work through the tax issues. Don't try to do this on your own. Even if you hire someone temporarily, it's really important that you get good, solid tax advice. And another option is to defer the quarterly paying of employee retirement contributions. Again, this you need to work out with not only an accountant, maybe your payroll company, maybe your plan administrator, but there are some options. I'll say one more thing about the PPP loan and some provisions that are still being sorted out. So one of the things that has been out there is that if you get to take a PPP loan and it is completely forgiven, and so you didn't really, you had your payroll expenses covered for a period of time, you can't turn around and take a deduction this year for those same payroll expenses. Now there is talk about that being amended and being changed, but that hasn't happened yet. So this is the PPP program, and actually many of the other business supported programs are still evolving. And so you need to stay tuned. You need to stay in touch with your accountant. Maybe even your payroll company will be more up to speed on this. So with that, I'm going to finish up to just some other options for business owners. So one of the things that you want to be careful about, you know, accountants are terrific. They want to make sure that you stay out of trouble as far as taxes. But this is a time where you're going to need very careful estimating of your quarterly tax payments that are due. And we know that the due dates have changed. They have been pushed back depending on which state, or if you live in the district, they have been changed. One of the things you're going to want to do is go quarter by quarter with your accountant, because if you didn't have any income, don't make estimated tax payments unless you really need to. A lot of times what the accountants will do is say, to be in safe harbor, go ahead so that you don't have a penalty, go ahead and make a tax payment based on your last year's taxes. And the reality is we're going to need to be a lot more careful. As I said, cash is king right now. So work carefully and closely with your accountant to figure out, what do I really need to pay right now, and stay on top of that. And so I mentioned the Economic Injury Disaster Loan Program. This is a longer-term loan program. You need to be careful about the provisions on this, and that $10,000 grant that they were supposed to be providing to businesses, many businesses have not even received that. So that program is that they have promised in the last week or so that they're going to start to catch up on all the applications that are in the pipeline. And that one is, you do apply through the SBA, the Small Business Administration. So you can go on their website, check out more information to see if that's something that you also need to consider besides the PPP program. And the other thing that you can do, and Melanie already talked about this, especially if you're a sole proprietor, but even as a business owner, if all of your extra cash in the business needs to go to your employees and to keeping the lights on and paying the rent, but you've also got an IRA or 401k, you could take a loan or a withdrawal to help you personally cover your expenses on the home front while keeping your business open and moving forward. So that's an option for business owners to consider. And there have been, as Melanie mentioned, there have been a number of community-based grants. The district has had some programs, Northern Virginia and Maryland, as well as counties, have all had some programs available. They do go pretty quickly, so you need to stay on top of that and keep your eyes open for anything new that might open up. So lots to think about as a business owner. It can be really challenging. It can be a little disheartening, because here you are trying to keep food on the table at home and maybe even having to homeschool your children. You're also trying to run the business. This is a time to be reaching out, asking for help wherever you can get it, whether it's from your own parish, whether it's from the community, whether it's from friends and family, if they can help. This is a time where we all need to come together, and we need to help and support each other, because this is a lot to take on. So with that, what we're going to do is shift gears, and Rick is going to step in. My colleague Rick McCumber is going to step in to talk about and make sure that you're paying attention to some of the fraud and scams that are out there, unfortunately, during this difficult economic and health crisis. So take it away, Rick. I'm going to stop sharing, and you can go ahead and share. And then you need to unmute yourself, Rick.
I found it. Okay, thank you. So we just have a few minutes left, and we probably have a time for questions. So I'll go relatively quickly, but just need to make sure that our radar is up on these interesting times. I know you probably think back to 9/11 if you were around then. There were some really devious and very not nice people that tried to take advantage of the situation there, and those same type of people also are out there. And the difficult thing there is that even in the last 20 years, the scams and ransomware and so on has been proliferating, and any 15-year-old in Eastern Europe or in Asia can launch something that could attack you. So always be aware. I'm going to talk quickly about a couple things that are more prevalent, have been prevalent since the COVID crisis, and I'm sure all of you probably have similar experiences that we can probably share. So the first thing obviously is spoofing. That's where someone tries to communicate thinking that they're trying to lead you to believe it's somebody else. I actually know of a situation where someone hacked into a pastor's Outlook, stole all the emails, and then sent emails to key parishioners in senior positions saying, can you approve an invoice for me in our accounting office? And I'll talk to you about it later, type of thing. And it was so clever that they actually downloaded the picture of the pastor from their website and included it with a little icon in the email. So just be very careful. Never probably trust an email directly. You always want to pick up the phone and make sure that that's really a valid request. And the same thing about phishing. Basically, you'll get an email with a link, and it says click on this link to register or to sign up for something, and it's a fraudulent link. It'll take you to a link that you think is going maybe to the IRS, but maybe it goes somewhere else, and that they trick you then into typing in your password or your social security number. So always be very careful when someone sends you something like that. In particular, we're going to talk about 4 scams. There are trying to get your hands on the stimulus payments, fraudulent charities, and fake cures, and security schemes. So most of you have received your payments. If you haven't, go to this website only and contact them. You don't want someone to contact you about the payment. They will never say you overpaid, send some money back to us. You'll always want to contact them with a phone number or an email address that you trust. And there's, I think we have experience. I think Lisa, someone had someone actually steal their stimulus check from their mail and deposit it, and the bank was able to track that person down and notify them and alert them of that. So they're out there. Watch your mailbox. Also, be careful with charities. Things like on GoFundMe, those aren't really vetted. So I'm sure it wouldn't be too difficult to put out a story and really try to tap into folks wanting to help out. So make sure you vet the organization. Charity Navigator is a great website that you can do that with. And even when you get into the situation, I know someone who's actually heard about someone, through a friend of a connection whose father died of COVID, and this person that reached out directly to the landlord and is making rent payments for that person for the next 6 months. So that way it goes exactly to where you intend. And obviously there's a lot of soothsayers and fake miracles out there that they might try to reach out for. So be very careful. Don't drink any bleach, and be aware that if there are, for example, self-administered tests, it will be through a reputable lab company like LabCorp or Quest. You won't find something that comes from a small town in a distant area that would send you a test. That's probably not valid. And last, some people might try to trick you into, get rich quick schemes because of the volatility of the market. I'd be very wary of, jumping into Bitcoin right now, or saying that if I go into gold, it'll, it's going to go straight to the moon. I would obviously talk to someone that you trust with investing, and if you do try to take advantage of this as an opportunity to make a return, make sure that it's vetted by at least someone you trust. And also, I guess because of the delay in mortgage payments and the delay in some of the commercial mortgages, there are some real estate schemes out there that also present risks. They might want you to ask you to invest your money into a REIT or something. So just be careful. There's a lot of creative people out there. If you do run across a scheme or a scam, these are the sites that you can contact and report it, or at least ask them if it is a valid or invalid scenario or opportunity. And they usually keep a pretty good list of it. And you can actually review the list of scams that have been reported. So with that, I'll hand it back to Melanie. If I can stop sharing.
Actually, I'm going to go ahead and wrap it up. So
oh, good. Okay.
That's fine. And so, yes, let me go ahead and share my screen. We really appreciate you being here with us today. We're going to post this webinar and some resources on the diocesan website. We also look forward to rolling out some faith and financial workshops. We've already done some beta workshops, and we look forward to doing that as we move later into the time when we can all gather again. So as we wrap up, we think it's a good time to start to think about, what if something like this happens again? Maybe it's not to everyone, maybe it's just to me. But I think there's a few good tips here. One is to get a good handle on your cash flow as soon as possible, whether you're a business owner or individually. The sooner you have a sense of what your absolute fixed expenses are, what your discretionary expenses are, the better that you can manage and control what happens to you in the future. And certainly creating an emergency fund. We normally recommend that you have 3 to 6 months in cash, in savings, a money market account, whether you're a business or personal, that you, in case of crisis, that you could access if income has dropped, expenses have gone up, and you're prepared. And certainly, as you can, being able to pay down debt once your situation is better. Right now, as I said, cash is king. Better to hold cash than to necessarily pay down your debt. And having a plan later on, maybe later this year, next year, to get a handle on that will certainly take some of the pressure off. And fourth, investing systematically and automatically, so into your 401k, into an IRA, even into savings, taking some of your paycheck each week, each month, and moving it over to savings to build that emergency fund. And certainly this is a great time. I was just reading, interest rates are quite low on mortgages. And so it's a perfect time to go ahead and refinance and rework not only a mortgage loan, but other loans that you might have out there, because interest rates are going to stay low for at least the next few years. And then finally, one of the most important resources that you have isn't just the cash you have or your investment portfolio or your ability to work. It is also your credit score. Your credit score is used for everything from getting hired for a job or renting an apartment or for your car insurance. And so it is a valuable resource that needs to be protected. Resources like creditkarma.com, as well as perhaps through your own bank or credit card, could be great resources to make sure that you're monitoring your credit score and trying to keep it as high as possible. So with that, we really appreciate your time today. We wish you all the best. Stay healthy, stay safe, and thank you.